Okay, the markets have just been on an absolutely wild ride. We've seen records getting completely shattered left and right, and what's really fascinating is that we have two very different assets, one that's ancient and one that's brand new and digital, hitting these massive milestones almost in sync. So what on earth is going on here? First up, in the digital corner, we have Bitcoin. It just came roaring back, completely smashing through the staggering price point of $116,000. I mean, that is a huge, huge milestone for the king of crypto.
But get this, at the exact same time, the original safe haven asset, gold, was also making history. It was pushing past all its previous limits to hit a new all-time high of $4,100 an ounce. Wild, right?
And just to give you a sense of the sheer firepower behind all this, those new Spot Bitcoin ETFs, the ones that let you trade Bitcoin just like a stock, they saw over $1 billion in trading volume, and that was just in the first 10 minutes of a single day. That is a tidal wave of capital moving at lightning speed.
So seeing this parallel surge in both the digital world and the physical world is, well, it's pretty unusual. It really makes you ask, what is driving this market frenzy? Okay, let's dive into this.
Let's start with crypto, because to really get what's happening with this rally, we have to look past just the price charts. We need to see who is actually behind the wheel here, who's driving all this momentum.
And, this rally was broad. It wasn't just a Bitcoin story, hitting that incredible $116,000 mark. We also saw Ethereum, the number 2 crypto, push right past its own key level of $4,200. You could feel the energy across the entire digital asset space.
But here's the real story. The fundamental shift that's going on. This is not just being driven by individual investors anymore. Nope. This time, Wall Street has officially arrived at the party. And believe me, they are making their presence known in a big, big way. Now, what's really interesting about this slide is how it lays out all the pieces of this institutional wave. First, you've got the ETFs, right? They're bringing in that massive, super accessible trading volume. Then you have these huge corporate players like Saylor just adding millions more to their company's balance sheet. And maybe most important of all, you've got banking giants like the $1.7 trillion Citibank getting ready to offer crypto services. This isn't just dipping a toe in the water. This is a full-scale institutional embrace.
But it wasn't just the digital world that was seeing fireworks. At the same time, the oldest store of value we have was quietly having its own historic moment. And just look at this momentum. Gold didn't just hit a new record and then stop for a breather. No way. First, it broke its all-time high, hitting $4,075. But then, it just kept pushing, setting another new record at $4,100. That shows some serious, sustained, and powerful demand for the precious metal.
Okay. So this brings us to the central puzzle, right? These two assets, they're often seen as competitors for that safe haven crown. So why are digital gold and actual gold both booming at the exact same time? Well, the answer seems to lie in the bigger economic picture. Whenever you see investors flocking to assets like these, it's usually a signal. They're looking for stability. They're looking for a safe place to park their capital because of some uncertainty out there. And right now, there are definitely some signals of uncertainty flashing. So the crucial point is we're hearing this direct warning from Treasury Secretary Bessent, the person literally in charge of the nation's finances, who said that government shutdown is starting to hurt the economy. When investors hear that kind of warning, especially from the highest levels, it makes them nervous. It sends them searching for assets that are outside the traditional system. Let's move on and see how this builds. So, what's the big takeaway here? When you put all these pieces together, the crypto surge, the gold rush, and these economic warnings, a really clear picture of a shifting landscape starts to emerge.
It really all boils down to these three trends that are all converging at once. First, you have the undeniable institutional embrace of crypto, which gives it this whole new layer of legitimacy. Second, you have the timeless, enduring appeal of gold as the ultimate safe haven when things get rocky. And third, all of this is happening against a backdrop of growing economic uncertainty that's pushing investors toward both. What we're very likely witnessing is the beginning of a brand new chapter for what investors even consider a safe haven asset. It's not a simple choice anymore, one or the other. We might be entering an era where both digital and physical assets play a role in an investor's search for stability. And this brilliantly illustrates the big question we're left with. As Wall Street rushes in to legitimize crypto, and at the same time, traditional economic indicators are flashing warning signs, the very definition of a safe asset is being rewritten right before our eyes. What does it truly mean to be safe in the markets of today and tomorrow?